Very fast, huh?
Yeah. Welcome members to today's virtual meet at Borivali Central CP Study Circle. Today we have a learned speaker, CA Dr. Gautam Shah, who will take us through the trust amendments and taxation related to trust. Before I request Aman to give a brief introduction of the speaker, I request members to rise for the institute motto, please. Sukandar?
I'm doing it.
Okay.
One second.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you, Aman. I request Aman to please introduce the speaker.
Good evening, all the members. It's a great privilege that we have CA Gautam Shah with us today. Everybody who practices in the area of charitable trust or private trust will definitely know him because they would have heard him on several occasions. Now, not to waste much of a time, I will give a brief introduction about him. CA Dr. Gautam Naveen Shah is a practicing chartered accountant. Besides being a chartered accountant, he also holds a PhD in business finance, where the topic of his thesis was Management of Charitable Institution, a Financial Perspective. He also completed graduation in the commerce stream from Narsi Monjee College of Commerce and Economics. He is currently the managing partner of Gautam Shah and Associates. Gautam Shah and Associates provides all the traditional services of chartered accountants such as direct, indirect, and FEMA advisory, statutory and internal and tax audit services, and provides additional services in various allied fields of financial management and legal consultancy. He specializes in issues related to charitable NGOs, estate planning, private trust, family settlements, wills, arbitration, and other allied fields. He is guest professor at SP Jain Management Institute. He is a core committee member in BCAS. He has delivered talks on charitable institutions on various forums, including BCAS and ICI. He has been awarded Outstanding Research Contribution Award, ORCA, by the University of Mumbai. He has been acknowledged for his contribution at the International Conference on Commerce and Management, Mumbai University, by awarding Outstanding Research Paper for last several years. His motto is to help people with the knowledge that he has gained as he is staunchly believes that knowledge gained is of no use unless it is shared with others and who did not get the same opportunities that he did. His passions include interacting with people and making new friends. He's also an avid sportsman and plays table tennis, cricket, badminton, and carom. With this brief introduction, I warmly welcome you once again, sir.
Thank
And
you. Welcome.
as it is a virtual meeting, we cannot offer you a physical memento. So I'll just share with you the virtual memento prepared by us.
Very good.
And I would also like to say that on behalf of the speaker, BCSC contributes 500 rupees to ICI Benevolent Fund. So that is one thing that we are going to do.
Thank you.
And without wasting more time, I request Gautam sir to kindly start with the session.
Good afternoon, friends.
Good afternoon.
Let me take this opportunity to thank my professional brothers as well as the office bearers, namely Vishal, Aman, Sikandar, and others, for giving me this opportunity once again to deliberate on a topic which is very, very close to my heart. I've been practicing in this area for last 35 years, and still I'm not able to understand section 11, 12, 13 thoroughly. You can understand how complicated the wordings are there, and every day there can be a new interpretation. That is why, these lectures of charitable institutions have gained a much now everywhere, and the government is helping us a lot by bringing in a lot of new changes day and day night. So I'll be, distributing my topic in, again, two ways. One is for the state law and one is for the central law. Even in the state law, there are a lot of changes which has been brought in. The changes in the state laws are very funny. Like, it's not been brought by an amendment. It is brought by the people who come on the seat. So it's really very worrisome sometimes, because I was just deliberating with Aman, as Aman is also practicing in a trust area, and he is very much familiar with charitable, institutions, as well as the Charity Commissioner office, which is there in Bombay and elsewhere. This is one area where, I think, Borivali Central CPS Study Circle office, where I request that you should take your members for a tour. This is an area where you should never forget, because I feel, there are 173 participants which are there. And if I just ask each and everyone, and I just pose a question to them, that whether they do yoga every day in the morning or do some form of an exercise or anything, out of 173 participants, I would say that almost 150 would say, yes, we do some type of yoga, because we chartered accountants are so stressed nowadays. I don't know, we take everything on our head, and we are so stressed nowadays that yoga becomes compulsory. So I request the office bearer that once you take them to a tour to a charity commissioner in the morning by 9:30, if you reach there, and when you leave by 6:30, I tell you, for a year they will not require yoga. Because once you enter that office at 9:30 in the morning, that I do always, and when I come down and when I sit in the car and my driver offers me a cup of coffee to me, I'm so jovial. I am so at peace of mind. And he always says, sir, क्या हुआ आज आपका mood बहुत अच्छा है, जब charity में जाता है mood अच्छा है. So I used to just tell him that this is a place where I get a lot of peace, because once I enter at 9:30 in the morning, and when I go out at 6:30 in the evening, I am where I am sitting. I am there only. I don't do any work. Neither anybody does any work. And at the end of the day, I come without doing any work, but spend a whole day out there just thinking about the people who are working there, what type of people they are. And I'm really, really perplexed. I'm really surprised. So this is one tour which, I would like you to take. Like, I'll be the leader out there. I'll be a guiding tour to you, and I will take you out there. So with a lighter mood, let me start with my presentation. As our father of nations suggests, you must be the change you wish to see in the world. I feel we chartered accountants, whoever right now are there and who are doing a charitable trust practice, my sincere request would be that please don't take this audits or this assignment in a lighter way, because this is the compliance of a charitable institution has increased so much nowadays that it is it is, I would say, I would akin to this to a corporates, where it's a listed company or a private limited company or a limited company, because so many compliance are there nowadays. So please, whenever you take an assignment, many a times the assignments are given where you are getting a corporate work side by side, this work is given, and always this has been said कि ये तो आपको free करना है. I mind you, please don't do it that way, because even there is a lot of responsibility nowadays attached to it. And once you sign any balance sheet, as you see last after 1st July 2016 or 17, I forget, on our foundation day, our CA foundation day, when Mr. Modi had given that speech, very well-known speech to all of us, I think from that day onwards, the laws have made in such a way that how to frame a chartered accountant, how to fix a chartered accountant. And many a times what I have seen, and this is what I have also observed, is that it's not wrong, because a lot of times we do a mistake, not deliberately, but certain times we get carried away, because we are a chartered accountant is a kind of an emotional creature. Like, we get attached to our client. We become so friendly, we become very family like oriented. And then, we do certain things in good faith, which is going to hit you not today, but after some time. So please, my sincere advice to you that we need to change now. We have to be professionals with our client. Even in a charitable institution work that you are getting it, please see, because I have got a lot of audits from a people wherein their charges are very nice. Someone is charging 101 rupees, someone is charging 11 rupees, someone is charging free of cost when they come. And when I tell my fees, certain times they say कि तुम तो लुटते हो यार. And that is what I like to hear also. जब कोई बोलता है मुझे कि मैं लुटता हूँ, I said yes sir, because that is what I am. And basically I'm sorry, I cannot change, because I have learned a very, very, very in a bad way, because even, many a times when we do a work, it is, we learn from the mistakes that we make it. So certain mistakes which I have made in my life, I don't like my fellow brothers to do it, because in the long run, you are going to repent. And I have seen any free work is not been appreciated. A very small example I give, and this is why thereafter I start my presentation, is very, very valid. I have a client who is a very good client, and we gave always, he's been there with us for last 28 years with us, 28 years with us. Regularly, we give him any, whatever advice are required, we gave it. And okay, there was a normal agreement with them, like, per year charges were fixed and everything was there. Now, there was some situation wherein, they came to us for a specific queries, and we started giving them the information what was required. We worked very hard. We gave an opinion to them, and ultimately that opinion, he said that, Gautam, your Gautam Shah associate is not a well-known. We require an opinion from a well-known person who can give an opinion to us. And secondly, whatever you have charged me, is really, I'm telling you, I have never heard a chartered accountant charging so much. So then we arranged a meeting with one of the very good solicitor firm, because it was a legal opinion, and based on that, and we zeroed down to a good solicitor who gave us an appointment at 7:15 in the morning. And we went to that solicitor. He's very well-known solicitor, and it was a 45 minutes hearing that was given to us. During that 45 minutes, we ordered 2 coffees. I said, don't drink a coffee here, but my client said that, when we are here in the morning, why not we have a coffee? So the opinion given by that solicitor was almost same, but definitely, being a solicitor, they have really glorified the issue and presented that in a very nice way, which I could not present because I was very bold enough to give an opinion to them. Ultimately, what happened that, the bill which came was almost 100% more than what was my bill. And that 2 coffee costed us 50,000 rupees. 1 copy of 25,000 rupees they charged, because the answer given by that solicitor was that while you were drinking coffee, I was free. While you were drinking coffee, I was free. And that was my charge for that. And when they understood this, that is the time when I spoke to my client, Opinion was same. Definitely at the end, what I said was the thing, but the way it was presented was really super. I understand whatever charges they have taken is very good. So that is why I say that we have that quality. We have that intelligence. Please use that intelligence. Don't do anything free of cost. Many a time people come to you that this is a charitable trust, or then you have to do a free of cost work only. Try to see to it that no doubt, do it, but then do it with full conviction. Do spend a lot of time on it and give the best advice to it. So now let me start with my presentation. Sorry, I just have to give you certain things to my fellow professional brothers. We will start with the state law. We have a beautiful state law, that is the Maharashtra Public Trust Act of 1950. It was initially known by as Bombay Public Trust Act of 1950, and in 2017 there were certain amendments. These amendments were very good amendments which was brought in, and that amendment really changed the full certain work of charity commissioner work out there. And thereafter it was brought again, the name was changed from Bombay to Maharashtra. There are few things which I would like to be very clear out here, is that there are a lot of audit queries or audit notes that when you do about it, once you see the balance sheet, our charitable trust have given loans or accepted loans. Now that loans, when it has been accepted, there is no comment of a chartered accountant that a qualified report by a chartered accountant stating that no charity commissioner permission has been taken. Sometimes the property is being sold without taking the permission of charity commission. Sometimes the property is leased without the charity commissioner permission. So mind you, there are a lot of things which has been happening. Sometimes certain objects laws are changed without informing the office of charity commissioner. There are certain clauses which are added without informing the office of charity commissioner. If you are registered in Maharashtra, if your trust is registered in Maharashtra, please note that you need to take permissions in certain situations, and then only you can go ahead. Now, once any of this matter comes to you, the first very important thing a chartered accountant has to look into is that whether the constitution, as far as trust is concerned, whether the trust deed has been drafted properly or not. If it is a society, it should be memorandum of associations and rules and regulation. And if it is a Section 8 company, it should be memorandum and articles of association. Our first duty is to see to it that you take this constitution copy, go through that copy once, twice, try to understand what is mentioned there, because the law is very clear that whatever is written in that constitution, that only the trust can do. If it is not there, the trust cannot do anything. Please mind you. And I have seen many of the charitable institutions who are doing a charitable activity which is not there in their constitution, not permitted in their constitution, but still they are doing it. And ultimately, again, the onus is on a chartered accountant is doing an audit. Why I'm coming again and again to it is that ultimately at the end of the day, once anything happens in that trust, it will be a chartered accountant who is going to be a soft target, not the trustees, not the directors, not anybody, because we are learned and they expect us to look into it and do our work very diligently. So mind you, please see to it that your constitution should be gone through very thoroughly. Many a times the constitutions are prepared in such a haphazard way. It has been prepared with without any application of mind, because what happens? We chartered accountants are not lawyers. We are not lawyers. It is not a legal mind that we have. But there are certain lawyers also who have this practice of cut and paste in a trust deed or a other constitution which has been created. Initially, it will be very beneficial because in the initial period, you may have got registration everywhere. But in the longer run, this cut paste and this loosely drafted trust deed has a future which is going to be very problematic, because it has to die. It has to be having, that should be a problem, because if the trust deed is not drafted properly, mind you, everything will be no problem. I always say to my clients, whenever my client comes, that we draft a trust deed. It is like an art, sir. It's not like, we take this, there is a basic document which has been there and we share document with everyone. It's not a basic, pamphlet or a draft which has been kept and you can give it to all your clients. It is a client who has to tell us everything, that what is in his mind, why he wants to create a charitable trust, for what it is, what are his objects, and what is his goal, like, at the end of the day, what he wants, whether he has to serve to the people at large, or he has any malafide intention of only providing to his near and dear one. So that has to come out from the client. And based on that, a document can be prepared, and it has to be prepared taking into consideration every act which is applicable. Your state act, your income tax act, your FCRA act, whatever acts are there, you have to look into it that whether all that is incorporated or not. And thereafter, a deed is prepared. And thereafter that deed, I'm not saying it will not be a problem in future, but the problem will be minimized because it has been drafted with taking into consideration all the ingredients. So the first very important thing, whenever client comes and whenever any of the assignment comes, please ask for the trust deed. There are certain trust deeds which are drafted very loosely, where there are commercial, objects which are there. Like I have seen in many of the trust deeds where they say gymnasium. Standalone gymnasium is having a problem, but a school with a gymnasium, it is not a problem. An education institution with a gymnasium, it is not a problem. Or there is a maternity ward. Maternity ward standalone has a problem, but if it is with a medical thing, it is okay. There is mentioned in the object charitable that the hall will be there. Now, hall as such standalone will be having a problem, but if it is added to an education institution or for any other activity which is a charitable activity, not a problem. Like how we have prepared a memorandum. In the memorandum, if you see, there is a main object, there is an ancillary object, and there are other objects. I always advise that here also there should be a system in the trust deed as well as your memorandum where you can have this, where there should be a main object, what should be a main activity which they want to undertake. Then there can be other objects also. And give headings to each of it. Whatever under section 215, whatever headings which we have of the income tax, please give it, and thereafter the trust deed can be. And there are other things, like one of the question before we start this presentation, Aman asked one of the question to me about this irrevocability, whether that irrevocable thing should be mentioned in the trust deed or not. It's very funny, very, very funny. Now this came when Controller Auditor General in 2016 did some audits of some of the charitable institution, and he mentioned to in one of the remarks that the trusts are not having irrevocable clause. We don't understand one thing. First of all, always we have been taught when I started my practice or when from whom I have learned, they say once a trust, always a trust. It's a perpetual thing. It cannot die. It cannot have an extinction. But now when we write irrevocable clause, means we were not able to convince the officer at that point of time why there should be a irrevocable clause. Now it has been there that we have to mention a irrevocable clause, means it should not be revoked back to any of the people, any of the family members. That is why this question was raised and the answer was given by the department that it should be revocable. The further funny thing came that there should be a dissolution clause. Now I don't understand a North Pole and a South Pole, irrevocable and you say dissolution. I don't know how it matches with each other, but then again, it's a law, not been framed anywhere, I would say, not been mentioned anywhere. But the system has been set in the income tax department that if you wanted at that point of time 12AA registration, this clauses should be there. Otherwise, go to the charity commissioner and get the amendment. We had a very funny case in our system when one of the commissioner of income tax exemption was there and he objected that you don't have a dissolution clause. And we went for our ATG renewals at that point of time. 5 years, 3 years, 2 years renewals were there. I said, sir, this has been in 1962, sir. The trust is, we have got always the ATG. I have not changed my object. This trust deed never been changed. No amendment has been made. Gautam, no, but I want it. He said, you just go to the charity commissioner, they will give it to you in 15-20 days. I went to the charity commissioner, we made an application under 50A1, which is a scheme that we need to frame. And then we were talking to the commissioner at that moment of time, the charity commissioner. He said, at least you take 6 to 8 months, then only it will be given. And thereafter, we had a hearing between the Commissioner of Income Tax and the Charity Commissioner office. And that time, Charity Commissioner said, yes, scheme takes a lot of time. It's not so easy here because we need to verify what are the additions, deletions they have done in the original thing which has been done. Ultimately, the Commissioner was very good enough to at least grant us this ATG because on the basis of the application which was filed. But thereafter, later on, there were certain commissioners who were not able to understand. They say you just file it, get the order, and then we'll give it to you. So this is again, few of the clauses which we need to be very sure when the new trust deed is being drafted now. When the older trust deed, still it is applicable, not to worry about it. But in the new trust deed which has been drafted, there are certain clauses which should be there. Like I said, dissolution, there should be irrevocable clause, there should be amalgamation clause, there should be very, very serious thing about what are the trustees' duties, what are the trustees that what they can do, what functions they can have. And many a times it is not there. Many a times what we have seen that there are certain times where they write that the investment can be taken in the name of the trustees and not in the name of the trust. Many a times this has been said. Recently, again, we have got a very live case wherein one of the institution has taken property in the name of the trustee. Why? Because wherever this property was taken, the society was not accepting in the name of the institution. In Bombay, we had a lot of problems with the society where the society secretaries or the society committee members were not giving it in the name of the charitable institution. They said, no, it is not possible, not give it, but you can take it in the name of the trustees. So many a times the properties are taken in the name of the trustees. Now 148 notices are issued in stating very clearly that a person who has taken the property in the property registration, it is the name of the trustee, and they have been issued a notice that why don't you have filed your return of income? Why this property is not been disclosed? So again, I'm telling you, these are all the funny things which are going to come, which is now because of this online, which are where this computerization which has come. They have got a lot of multiple information which is there with it. So my only concern is here one thing. Yeah, Amardeep, please. Amardeep has raised a hand.
Sir, we will take the question at the end so that the flow doesn't break.
Okay. Can I go ahead?
Yes,
Yeah.
please.
No problem.
And sir, the slides are not changing. So
No, it's still not
is it on purpose?
Yeah.
Okay.
Now, just initially I wanted to only raise this, thereafter I'll come with it. So basically, this is one of the things which I wanted to harp upon, that a trust has to be created in a proper format. Thereafter, there could not be any problem for your 12AA registration or 12AB, the new registration which has come, or your ATG registration. Mind you, as you see that, these are not perpetual now. Every 5 years, we need to go for a re-registration, both 12AB and 80, and that mode of time, your trust deed would be thoroughly checked by the income tax department. And that time, a lot of queries would be coming, and that lot of changes would have to be done by the charitable institution. So this is one thing which I would like to, harp upon, that, this is the way things have been. Now, coming to the minor things. There are a lot of queries which I raise when I go for my lectures, is that Section 22, that is the change report that is to be filed in the Office of Charity Commissioner. Whether for all the investment that we do, whether in a movable asset, whether the change report is required to be filed. Now, in a lot of institutions I have seen, there are multiple like fixed deposit, there are multiple movable assets they purchase during the year. So whether at whatever stage that is being purchased, we need to inform the charitable office, charity commissioner office. As far as Section 22 of the Maharashtra Public Trust Act is concerned, it's very, very clear. Any change, they have not said that only immovable property, if it is there, you come, or movable property there you can come. Any change, anytime. So what happens that, let us say I have a investment today of fixed deposit. I have deposited my funds into fixed deposit. Within 90 days, I have to inform the Office of Charity Commissioner. Otherwise, there could be a problem. So now there are multiple times. Now there can be a renewal of fixed deposits. The renewal of fixed deposit means what? Your fixed deposits are renewed, and there is a new fixed deposit which is being created. So again, anything, because that has changed the color. So again, that could be an issue which we need to bring it out here, and thereafter we can look into it. So on Section 22 is very clear. Any change you need to, and if it is not been done, what we follow as a practice in our office is that as on 31st March of every year, we file one change report of whatever changes are there, and inform the Office of Charity Commissioner. We don't go into a daily thing because it's very cumbersome. So that is a thing which we follow about it. There is some change in 36(1)(a), that is a sale application. The sale application, whenever you make to the Charity Commissioner office, initially the law is stating very clearly that once a trust wants to sell an application, they have to first have a prior permission from the Office of Charity Commissioner. So there is a procedure laid down by the Charity Commissioner which need to be followed. Maharashtra Public Trust Act have laid down the conditions, the procedure, and based on that you have to file an application in the Office of Charity Commissioner, and based on the compliances and your arguments and your hearings, you may or you may not be granted permission to sell the property. There is one condition which is mentioned, that you have to give a advertisement in the newspaper, in any two newspaper, one in local language and one in English, for your intention to sell this property to the public at large. And based on that, the tenders are invited, the offers are invited, and based on that, the application is filed. Now there is a change out here, is that need not have a advertisement in the newspaper. Once you file an application, you can write in your application stating very clearly that we give this authority to the Office of Charity Commissioner to allow us or to give us, means they give an order, Charity Commissioner gives an order, yet now you publish the notice in the newspaper and all the tenders or offers should come to their office. So the address which would be mentioned at the bottom of the public notice will be their address. So all the seal covers of the offers and tenders will be received by them. At a designated date, they will call all the people, they will open the tender, they will again renegotiate with them, and they will select the final tender, the highest tender who has given the money. Based on that, you will get the permission. This was followed in Gujarat for quite some time, which the Maharashtra has also now taken it. Why? Because what was happening is that once you give an advertisement, you take a tender, you get an offer, you submit the application, the Charity Commissioner again insists that again you give an offer. So it was becoming duplication. So we requested the Charity Commission, why don't you take this power? Because in Gujarat the same thing is happening. So here you also do it. So you take a call, you call for the tender, so that at least that transparency has been maintained, that there is no any malafide intention or something is haphazard is not been done. So this is one major changes which has happened in 36(1)(a). Second major changes which has happened now, what we have seen is that whatever offer has come, if the offer is been directly received by the Office of Charity Commissioner, not a problem. But the old offers which are still lying in the Office of Charity Commissioner, they decide the value of the property and they give order. Let's take an example that you have a property where you have the highest offer is of 10 crore rupees. The Charity Commissioner sitting there may judge or may call for an independent opinion from the valuer, and then she will value the property. And if suppose whatever valuation comes, let's say that 10 crores have become 15 crores. So she will give an order that you have a right to sell for 15 crores now. That's really very ironical. It's something very, I don't know how, without giving us any room, without giving us any opportunity, that 15 crore order is given, whether our offer has agreed for that person to increase that offer from 10 to 15. So many a times what has happened nowadays, that whatever deals have happened, whatever sale has happened, has become null and void. The another major changes has come into the lease of the property. Now in the lease of the property, if the lease is more than 36 months, we need to take a prior permission from the Office of Charity Commissioner. Initially, it was perpetual. I used to get 99 years lease, 999 years lease. Now the government has curtailed, the Maharashtra government and the Charity Commission has curtailed by amending in 2017-18 that now only 30 years would be granted as a maximum lease period. Thereafter, you can again go for another 30 years if everything is okay, but only 30 years lease would be granted. So this is very major change which has come. Another very big difference which has come is that there is a slight misunderstanding in the language. Now the trust can be deregistered, means it can be closed. Closed in the sense from the Office of Charity Commissioner. people have a misconception. They say that once I get a deregistration order from the Office of Charity Commissioner means it's done. Deregistration is only from the Maharashtra Public Trust Act. The trust is alive. All the normal other provisions are applicable to it. In the income tax also you need to file the return, but you will not be registered under the Maharashtra Public Trust Act. So consequence effect are very huge, but people have gone for the deregistration. There is a difference between a deregistration and winding up. Deregistration is only deregistering from the Maharashtra Public Trust Act. Winding up means a total wind up. In winding up, you need to file an application under section 50O, and a civil suit has to be filed in the city civil court. It is a city civil court who gives you order of winding up. The charity commissioner has no power to give you a winding up order. Mind you, a winding up order cannot be taken. It is a city civil court who is going to give you a winding up order. Once you receive that winding up order means your trust is lock, stock and barrel closed. Means then you can say that, okay, now my trust has died. It's a death by giving a judgment by the city civil court. So these are the few things, I would like to deal for the state law, what I thought about it. Now let me take you to my presentation. It is fair to introduce new provisions, new rules, new acts day in, day out for the charitable institution. Because I have seen for last 4-5 years, there is every time there is a law which has come up, like, there is some changes or the other. And 2022 was a very good year wherein the law, the full budget out of that, almost 70-75% was concentrated on a charitable institution only. The amendments which have been brought in were very far-reaching amendment, which I'm going to discuss later on when I start my presentation about it. So I just, for the timing, why this has been happening, like whether due to the wrongdoing of the charitable institutions, whether trusts are not managed properly, whether trustees who are handling this are not doing their job in a proper way, or whether intentions behind creating the charitable trusts are not noble nowadays. Because the answers given by the government is that, there is a far-reaching, jugglery which has been happening in the charitable institutions. Lot of, unethical things are happening out there. So that is why they said that law needs to be revamped, and revamped in such a way that it has to be brought in par with the corporates. So compliance have increased so much in the charitable trust also that sometimes it becomes impossible for any of the person single-handedly to do it nowadays. That is why the laws have changed. There is primary reason in bringing changes everywhere. Let's say Maharashtra Public Trust Act, Income Tax Act, FCRA Act, CSR law, everything, wherever you go, the laws are changing. And it's not constant. Every time it is changing. They have literally taken this from Mahatma Gandhi, who used to really, our father of nation, used to preach that you must be the change you wish to see the world. Now they are changing this only particular trust because they felt that the trust law is not been not proper, like it's not a watertight one. This is a very basic question which I would like. Is this advisable to create NGOs under current applicable laws? I have my serious doubts. Let me be very frank with you that, whether now in the current scenario, whether a charitable institution needs to be created, advised that it is advisable to be created because of the compliances and strict whatever regimes that has been, lot of law which has been changed. Now you don't have that flexibility. And after this, when this, I would say that virtual meeting which has come, where we cannot go and explain to the assessing officer that what are the laws which are applicable, because 11, 12, 13 have kept option by them also. Most of the chartered accountants have kept this as an optional. Even the department, who are working there, they have kept this as an option only. They have not understood this properly, or they are not taking any interest in it. So mind you, once we have this online meetings with them, the assessment with them, it's sometimes really impossible to deal with them because the type of understanding that the person has is sometimes, it's out of your range. Like, you may think that, we are dealing with the people who really have no knowledge about this charitable institution. This is one of the things I think, at a later date, people will start pondering, because FCRA law, when I'm going to deal with the FCRA law and what has happened to many of our charitable institutions who have this FCRA registration, mind you, people have started thinking about it. A lot of good charitable institutions have started thinking about it, whether it is wise to now continue a charitable institution or it's a time to wind up the charitable institution. So this, I would like to keep it open. Whenever we discuss about it, I think this should be at the end, at the back of your mind. These are some of the issues which are there: drafting of trust deed, registration, change reports, loan from financial institution, lease of property, sale of property, amendments, amalgamation, winding up, irrevocable. These are the few things which should be there, and these are the issues which are going to come after 5 years when this 12AB and 80G is going to be renewed, because they are going to harp on it, because all your audit report which you will be submitting, and where any of this transaction which has happened and you have not taken cognizance, mind you, it is going to come back. Because I have seen that now many people have thought about it now. We are thinking that whatever audited accounts that you are filing in the Office of Charity Commissioner, in the olden days, I would say 7-8 years back, that were used by the department to have food on our paper. Like our audit papers were light and on that they were having food. But nowadays, they have started thinking about it, that whatever audited accounts are filed, they are thoroughly verifying by the third party. And the third party is a professional brother who is verifying that. And a lot of queries are taken out, wherein a lot of things are not reported by the chartered accountant. In their audit report, they have not qualified it. And mind you, one or this day, when they have time, when they have the manpower, a notice will be issued to that chartered accountant for the explanation that why, when a loan is taken, you are not qualified, why the permission was not, why the sale of property, why the lease is not there, where is our irrevocable clause, where is a winding up clause. So this is going to come in near future, not very close, but in near future, definitely. We come to the re-registration of the new provisions 12AB, as all must have done this, because 31st March 2022 was the last day. And if suppose, these are the things I'm going to share slides with you. I will not go into it because most of the things which you must be doing it. There is a form 10A which we need to file online. It was a very simple form, just file it. And after 7, 8, 10 days, 15 days, 1 month, you used to get the provisional registration. In the provisional registration, I think 90% of the trust or trustees may have not gone through what are the conditions which are stipulated. Horrible conditions are stipulated. It's a condition, sometimes it's going to be a nightmare, because that is a condition wherein a provisional registration is being granted. And if you see the heading of the certificate that has been issued to us, they write provisional. Nowhere in the act, nowhere in the rules, they have said that whatever certificates which will be granted would be provisional, except for the new trust where they have granted for the 3 years. There it is, they have mentioned that a provisional registration will be granted, and there are certain conditions stipulated to it, which will come to it. But here, even the fresh registration, which was your renewal registration, which was there, they have granted as is provisional. Later on, they understood their mistake, that provisional was dropped and certificate was issued. That provisional word was only dropped. Everything else was same. The terms and conditions were same. One of the trust had filed a petition or have filed an appeal with ITAT Bombay. And it's very good that, just recently we got a judgment on that all this provisional registration which were granted are null and void now. I don't know what would happen now, because every trust who has got this provisional registration, according to the order which the ITAT has passed, that it cannot be, because whatever conditions are mentioned, that was never discussed in the act, that was never there in the rules. And how come you can bring that conditions back, unnecessary in the certificate itself, and that too also it's a provisional registration. There cannot be provisional, there has to be a permanent registration. So now law has, the ITT has come off it. Definitely, income tax will be again challenging this in the High Court, and they will go into the Supreme Court. Supreme Court has its own way of working. Maybe at that moment of time, we may again get it back that no, whatever provisionals were granted, it's right. You carry on with it. After 5 years, whatever would be granted to you, that would be a permanent registration. So again, there is a lot of confusion which has been there. But once the certificate is granted, and just see the condition which is in there, because you accepted that. So you need to follow all the conditions which are there in it. I would say that whoever has that provisional registration or whatever certificate is been issued after that, please go through the terms and conditions of that, because there are certain conditions which are very, very, I would say very serious. And it would be like very difficult for us to manage or administer the trust. And it is like it will be difficult, for everything we need to go and ask them that whether we can do this or whether we cannot do this. Everything, for anything, we need to go and ask them. So this is one of the thing which was there. No doubt it was a welcome change. Stupidity on the part of professionals like me, who had to go there and back and argue with them that, sir, why not we have a one-time amnesty scheme for all the charitable trusts? As there are amnesty scheme for everyone, why not a trust should have an amnesty scheme? Because it was every year one of my pet project with all our chartered accountants who are practicing in income tax, where every time the law has been drafted, we used to tell them, sir, come out with an amnesty scheme, because we have a lot of charitable institutions who had not taken 12A at the olden days or 12AA thereafter, after 1996. There were a lot of charitable institutions. Maybe they may have not been guided properly, or they had not felt about it. So one time opportunity was to be given to them that this type of trust should come. They agreed to our demand, but again they changed for everyone. We wanted for only few trusts, but they changed for everyone. And the reason given is also definitely I understand, because they did not have the records. They did not have the records of the old charitable institution. So they want to generate a record. So there was that 16-digit unit registration number, which is now been given, so they can track the application, they can track the trust, because there are a lot of changes thereafter have been brought into it, wherein now we are in the public domain. As such, charitable trust is in public domain, but now they can have an online information of what we are. Like many of the information is with them, so there can be a check on a charitable institution, what charitable activity they are doing it. The reason behind introduction of this new scheme is rationalization of a charitable trust, uniformity, transparency, to provide an electronic database. Old trusts registered, however, have misplaced their registration number, nor the income tax has any records of the same. New trusts facing difficulties due to non-commencement of any activity, because whoever is practicing in this charitable institution, if you have seen when you used to go to the charitable for the 12AA exemption certificate, the very first question asked by an officer is that whether your activity has started. Now there is a catch-22 situation, because when we go to the trustees, they say, how can I start an activity because I don't have an ATG. Once I receive the ATG, I'll ask someone to give me a donation and then I can start the activity. But here the officers were saying you first start the activity and thereafter you come to us. So this was creating a lot of, because there were certain case laws which was really beneficial to us, that the activity has not to be seen. It is the constitution and the whatever the charitable objects which are mentioned has to look into it. You don't have to see the activity to give a thing, but then the law was drafted in such a way that they should be satisfied, and they were not satisfied if the activity has not started. So again, this was a problem. So this again, now it has been rationalized. Lesser scrutiny, lesser roving inquiries, that has been told to us that nowadays there would be no charitable institutions inquiries unnecessarily, because they will be now monitored, and every 5 years the commissioner is going to look into it, because he is going to see the last 5 years track record, and thereafter he is going to give you a further 5 years extension of the charitable institution. Weeding out the trusts which are dormant, because there were a lot of trusts who were having 12A, 12AA, did not file their return because it was not, they were not working, they did not have any activity or anything. So just to weed out them, this new scheme of 12AB was launched, and we appreciate the way it has been done. No questions are asked. Everybody was given the certificate, no doubt with whatever conditions which were there, but it was a hassle free, like, everybody got the certificate. So everything is a win-win situation right now. This is a chart which I'm going to share with you. It was till 3 months, 1st April 2021 it started. Further extended till 31st March 22. At least 6 months prior to, I'll be dealing with this a bit, at least 6 months prior to the expiry of period for which the registration was only granted. Pass order, final order within 6 months from the end. So again, like these are the first ones. You already have a registration, and thereafter you go for the renewal. Is the second, where you have to fill a form 10AB. This form 10B is just been 10AB is just been launched. They have just opened up in the portal. Now this form 10AB is only for the provisional registration, the new trust or the trust which did not have a 12A or 12AA. It is meant for that, because if you have started your activity, let us say you have started your activity. Now again, that is a subjective thing, what activity they mean. It should be something really substantial activity, or even a small donation that you start. Whether that would be construed as an activity, that again, I leave it to the judgment of the professional brothers. But my take on this is that whatever you start, you need to go for the again a permanent registration. Permanent in the sense, this is a provisional registration which is granted to you for 3 years. So once you start an activity, within 6 months of that activity, or before the ending of the 3 years, 6 months before the end of 3 years, you need to file for the permanent registration. That permanent means every 5 years you will get a permanent registration. So there this form 10AB would be applicable, and based on that you can go ahead with it. Then trust registration becoming inoperative, that is okay. Trust adopted, undertaken modification. Again, every time when the modification has happened, we need to go file form 10AB. And these conditions which are stipulated in 12AB, and the condition which is stipulated in the Act, that is 12A subsection 1 subsection AB, they say that there is any change in the object clause which is substantial, then only you need to come back for the fresh registration. But if you see the conditions which are laid down under the new or provisional registration which has been granted to you, they say that any change in any clause. So let's take an example that, I have to increase my number of trustees. My old trust did mention that minimum 2 and maximum 5. Now I want to increase from minimum 2 to maximum 11, suppose. Even for that, whether we need to again go for renewal. As far as the conditions are concerned, yes. As far as the law is concerned, it is no. So again, time will come. What practicality we need to follow. It's again an area where a lot of thinking would be done. But again, this judgment which of this charitable institution which has come in ITIT Bombay is helpful to us. If suppose they say that all the conditions which are there should be first brought in the rules or an act, and then you include that in your provisional registration or your permanent registration, whatever registration they call, and based on that you go ahead with it. So again, here we need to understand. Now here, one thing is very, very clear, that whatever they had promised, it is fulfilled. I am very happy with it. They had said that it would be hassle-free. So once you make an application under 10A properly, with filling all the whatever necessary things are there, immediately after a month or 2 months or 15 days or 7 days, you receive your provisional registration. That was the best thing which has happened. No doubt with the terms and conditions, but that was very good. We appreciate whatever it is. So all whatever was done, everybody has received this certificate now, and they are now in good books because everything has been done. And not to worry about it, we are compliant now. Reapproval of 1023 and 80G, like again, for them also, whoever has this 1023C has to go for the reapproval. And again, the same thing which is there in 12AB, only some change which has happened, but again, everything is same. We need to make an application on 10A, other extended to 31st March 2022. New trust, again, provisional registration would be granted. And in any other case, includes new approval and pending approval on the old for the final, again, 1 month prior to the application. So again, what has happened that year 1023C also was a hassle-free. Everything was hassle-free, very nicely done. If the selection was proper, you will get a proper certificate from them. So not to worry about that. Re-registration was introduced by Finance Act. 10A is a multi-purpose form. Only one form was there. There was a lot of question asked by a lot of people that ATG and 12A or 12AB should 12AA should be in the same. No, both the thing we need to fill up a form. For 12A, a separate form. For ATG, a separate form. Whatever the requirements were, that need to be done. Form 10AB is for the renewal, or renewals will be in 10AB, never to mix up, and that is why it is just been launched, so not to worry about it. The difficulty will start thereafter because this is launched very late. But let's see what would be a mindset of the people who are sitting out there, whether there could be any repercussion to us, because the form itself was not available. So a lot of people could not go for renewal under 10A, Form 10AB. There, while filing of 10A, read the instruction, follow the instruction. Wherever the fields are compulsory and you need to fill up, otherwise it will not allow you to move. Section code is very important. See, this is all, everything has been done. Whether trust deed contains a clause that is irrevocable. 10A, it was acceptable. Aman was telling me in 10AB, there is a problem. Definitely there would be a problem because 10AB is for the renewal. So they expect that, everything should be there. I will come to that also. Date of registration with Darpan portal, FCR registration under author's name, general doubts while filing. Now this will not be there because Form A is on 31st March 22. It is closed, it's not allowing you to file nowadays. So let us say, this is that 31st March was the last day. There was no extension for that. And we will come to it that, there were a lot of trusts who have not gone for it. So what will happen about that? So we are coming to that also. Form 10A has to be digitally signed. When Form 10A need to be filed, what are the documents need to be timed? A lot of things will come which were clarified. There were FAQ from the department. There were a lot of lectures which were conducted by professional brothers who have clarified. And this all became a very easy task for all the chartered accountants who were handling this. If the last question, if Form 10A is not filed on or before 31st March 22, what will be the consequences? This is where I would like to, I know this question is going to come, so I would like to clarify right now only. Let's say that, due to some or the other reason, we have missed the bus. The 31st March 22 was not filed before 31st March 22. Now, what is the remedy? The only remedy is that we need to file for the renewal now, because that's the only remedy. You will never get it because for that particular year you are lost. That year is gone, and whenever you want a thing, so you need to file a renewal registration only. You cannot have a permanent registration. Like it cannot be a 5-year. You will be getting a 3-year provisional registration only, and you have to immediately thereafter file normal registration also, because your already activity is there. It has already been started. Representation is getting prepared to send to the severity that in such situation what should be done. They had opened, they had kept it open till I think 7th or 8th of April. That is what people were telling me, that it was open. Now it has got closed. So they had given us enough time to look into it. But let us say in a genuine thing, it is not been done. So again, that year's exemption is lost because you are not having an exemption that year. You will now be getting exemption from 1st April 22 to 31st March 23, 24, 25, 3 years only. And once you start your activity, means for this year, if you start an activity, so what happens? You have to file a renewal application, immediately you will file a permanent application, wherein you have to write down that your renewal application number is so and so, that Form 10AB has to be filed there. So this is where, unless and until the department gives you another extension, that now until 30th June, this is allowed to all the trusts which who have not filed it, that's a different reason. But for the time being, I would say that no, it's not allowing. So this is a problem which is going to be faced by the trust. They will be losing it for a year, and when you lose that for a year, because if it is not applicable, then maximum marginal tax would be applicable to that charitable organization. initially it was a blunder. Now it has been rectified. So when I come to my all the recent amendment which has come, there are certain good amendments which the government has brought in. With that, of course, there are certain amendments which may not say that it's not good, but somewhat difficult amendments which have been brought. Like, they tried to, look into it that the double exemptions should not be given, and they have tried to block that. Controversial issue, what is the remedy? Form 10A is rejected, whether your re-registration or reapproval is rejected. Luckily, unluckily, I don't know, but I have not learned, I have not got any query from anyone that the form 10A is rejected. If there is any 10A rejected right now, please raise this issue in the question answer. Let me see how I handle that answer, because it has not been brought to us brought to our notice that any rejection has happened. What is the situation when ATG approval is accepted and your 12AB is rejected? It is a situation wherein ATG was given before the 12AB. The situation is there. It's something which is not coming to the mind. It has been done. That's okay. If your application for re-registration, whether section 115 TD will be applicable, yes. 115 TD would be 100% will be applicable according to me. In case of those trusts whose present is two exemption under section 12A and 10, I'll come to that. I have already prepared a slide for that. What is the remedy if mistakenly wrong form number has been selected? That also I'll come to. These two issues I'll deal when it comes to my slides at a later part of my presentation. Controversial, what is the remedy for a charitable institution who already registered in 12A, but either the certificate is lost or misplaced and there is no record with the income tax department, period 1970 to 75. Here also, the form A, you need to have some form of proof. Either ITR is there, or you have ATG certificate is there, or some type of letter that you have submitted to the income tax department way back. That was also allowed, and the concerned charitable institutions were granted for 5 years registration without any problem. Whether any further inquiry will be undertaken once the relation, it will not undertake right now, but at the time of the renewal, definitely 100% it will be there. At that time, with a microscope, they will be sitting and they will be selecting certain cases and they will be looking into it. What happens to the pending application which are already filed on or before 31st? That's not possible. We have checked with the department. Not a single application is there which was filed on or before 31st. You need to check your junk mail, because it would have 100% come into it. Many a time what we have complained to the department, we have got an answer that please see to the email ID that has been given, please see to the junk mail or a scam where we just put it in a spam mail, and we have got it, and we have got that the registration was granted. What will be applicable date for application filed on or before 31st March 21? It's the same thing. It will be applicable from 1st April 21. If you have got any other date, please intimate to the concerned Commissioner of Income Tax Exemption wherever our jurisdiction lies and talk to them. Yeah, so this is the basic what I have to bring this to your notice. Very, very important. What are the finance changes which has been done in 2022? Both the exemptions are brought at par. So selection of exemption will be an academic purpose. And I see next budget, that is what my thinking will be, that we can see a merger of two exemptions, not likely. This is my reading of it, because merging is a very difficult process. But I feel that, nowadays, 1023C and your 12AB, everything has become same. Let's take an example. Like, we had a 12A or 12AA at our olden days. And let us say we had this accumulation at that mode of time. Because if we are not spent 85%, or let us say below that, you need to accumulate the surplus which was there, more than what was required, you need to accumulate. We had an two option. Either we have 1 year option or we have a 5 year option. Either file online 9A stating the thing where that you may have received this at the end of the month or end of the year, hence you are not getting any time to spend that money, or a reason which has been given in a form which is 9A form which is there, you have to select that, and you get that 1 year extension and you can spend in the next year. or you file Form 10 along with the resolution online on and before the filing of your income tax return, everything now, because if you file afterwards, then there is a problem because you have to go for the condonation under section 119, and that becomes a headache because you need to explain to the Commissioner of Income Tax that why and for what the condonation is there. But if it is filed on or before the income return of income, you need not worry about it. So these provisions were applicable to 12AA. 1023, this was not there. It was like a trust, like where we have so many trusts where both the registrations were there. And we used to select, like we used to select for an activity, like let us say I am having a college and a medical hospital also. If I have an education institution, I would select 1023C. If I have a medical institution or a medical hospital, I used to select 12AA. I had that thing to do because I used to prepare computations differently in different way, and what was beneficial I was to take it. What was beneficial to me? Because in 1023C there was nothing. Whatever accumulations were there, you need not intimate anyone. No doubt you need to spend it within 5 years, which was a provision which was there, but no forms were there. And I'm being very frank with you, not a single officer knew about it that he used to check this. Ki within 5 years whether you have spent or not. There was no check about it because there was no form filed. Nothing was mentioned, no paper was there. So that was the best thing which was happening to us. Now, because of this Finance Act 2022, even institutions who have approval under section 1023C, there would be a form which they will come out of it, which they need to file it for a 1-year extension or for a 5-year extension. If I am not mistaken, if I rightly remember, 1-year extension still has not come. The 5 years extension is been mentioned. This is what was the difference which was there. Another issue was that 11(1)(d), the donation, corpus donation, which is a bone of contention. Hardly any people understand what is corpus donation, and that's really creating a lot of problems. And we chartered accountants are giving certificate based on that this is a corpus donation, because that has to be given to the Office of Charity Commissioner once you file that online audited accounts. So without understanding, many a times there can be a problem. Without any verification, there can be a problem. So this one corpus donation which was exempt under section 11(1)(d) when you are registered under 12A or 12AA was there. Likewise, in a 1023C, that corpus donation was never exempt. That has to be taken as an income because 1023 itself is an exemption section, which is a big brother. 11(1)(d) is a small brother. So how can that? So it was exempt. It was exempt that time. So that's the best part of it. So it was not there. Now that also has been brought that if there's a corpus donation, you did not show that in the computation of total income. It's a direct balance sheet item. So that's already been decided. There was one more section which was called 115TD, accretion or accreted income, tax on accreted income. 1023 it was not applicable. So 1023C trust, if suppose it has been wind up, registered, whatever it is, this 115TD was not applicable to them. Now this 115TD is applicable to even them now. So what has happened in whole? That whatever is applicable to 12A or 12AA is now applicable to 1023C. So whether I should keep 1023C or I should not keep 1023C. Whether I should go for only 12AA. Now a lot of question came before the amendment came. Before this amendment came, there was a lot of question because 10A was to be applied and we have two registrations, one approval under 1023C and one registration under 12AA or 12A. What is to be done? If you go deep into the law in the past means a year back, it was clearly mentioned that suppose if an institution has both, that is 1023C and 12A, and if he selects 12A, lifetime, that 1023C will never be given to them. Lifetime. There was no reverse position. The other way around, the law was very clear that suppose we went for 1023C, your 12A becomes inoperative, it becomes silent, it goes to sleep. So not to worry about that. As and when you want to wake him up, you can wake that creature 12AA. Now you come and then we can apply, and then 1023C will be lifetime closed. So we advise our client, please go for 1023C only. As and when we require 12AA or 12AB, the new section, we will revive it. But the other way around, it is not possible. When the department comes to know, because I think this lecture also they may be listening sometimes, it is RDA which goes there. Immediately this was brought into it, wherein all my 1023C, whatever works were there, like whatever differentiation was there, whatever advantage was there, has been washed out now. So I thought about it a lot that, what is to be done, but now nothing can be done because it is at par now. Still, 1023C has certain advantage over 12AA because of the complete exemption. We fall under section 10, so they are complete, all the income gets exempted. So we need not worry about the situation which is there. Whereas in 12AA, still there can be a scrutiny whether your expenses are towards the object of the trust or your expenses are not towards object of the trust. So where there can be a scrutiny and there could be a problem. But the major difference has now brought at one level only. So there is, as such, on the face of it, there is no problem, means everything is same now. That is why I use that net budget, we can see a merger of two exemptions because nothing is left now. Second major change they brought in is that clarification of taxation in case of payment to a specified person. They have now clarified it, very, very clearly clarified it. That if it is paid to a specified person, it will be taxable now, straight away. Need not worry, there could not be a reasonableness, non-reasonableness, unless and until there are certain criteria that we need to follow. Then only it will be allowed to us. Another thing which has come is that allowing expenditure in case of denial of exemption. This is the best thing which has come. I just, I said I will come to this slide, and when I discuss about it, is that initially a registration, let us say a charitable institution has not taken or not applied for a re-registration or re-approval under 12AB or a new 1023C or 80G. What could be as consequences? They have missed the bus. 31st March 22 was the deadline and they did not file their Form 10A online. What could be a situation? In the olden times, the situation would be the gross income of that charitable institution would be taxed at a maximum marginal rate. But now, because of this amendment, allowing expenditure in case of denial of exemption. Now what will happen? That further, if the reading is done, that if you lose your 12AB due to some or the other reason, because there is a denial of exemption, still your expenditure will now be allowed. So what will happen? Your net surplus, whatever is there, would be taxable, that too as the maximum margin rate. This is the best clarification that the government has got, wherein, okay, whatever surplus is there, you need to pay tax on that because you have lost your exemption or you are not applied for your exemption. Certain income under both the exemption to be taxed at a special rate. That also they have got that, anonymous donation is there, 115 BBC, a special thing which has come out with where they will be charged at a special rate. So that also clarification is very, very good, a welcome change, where now they are trying to come out with a thing where there should not be any, confusion in the mind of the trust or the professionals. So clarity has been brought out. The registration or approval and provisional registration and provisional approval granted under automated manner will be revisited to ensure that Non-genuine trust or institution do not get exemption and their registration approval can be cancelled. In the sense, everybody has got their re-registration, everybody has got their re-approval. Whether their cases are lying in the ITAT or the High Court or the Supreme Court, or it's been challenged, or they have lost the case, they have been treated as not a charitable trust because nothing has been verified by this 10A, by filing this 10A. So everybody has got the re-registration. So this will be revisited, which the work has already started, and they have started issuing notice to the trust whom re-registration and re-approval was granted without verification of anything and without verification of the past track record. So this has just started. Again, definitely, if suppose a trust who is working with a malified intention and who has already lost the registration, and again they have been granted because they have not verified anything, again that trust need to be deregistered, or they should be brought to the tax, which is on which tax should be payable. Compulsory to keep and maintain books of accounts and other documents in such form and manner and in such place. Now this is again a very, very big change. They are going to set the books, like what type of books we need to prepare and in what form, like that also they will say, they will specify it. It's still not come. And where this book should be always, because many a times it is this happens mainly in the society, a charitable society, because charitable society, certain charitable society has every year, election or selection. So every year the members get changed. So every year the treasurer gets changed, or a secretary gets changed, or a chairman, whoever keeps the books. So what happens, like, if the books are traveling, like, from one place to another, and they are not being kept at a place where the register office is there. Maybe for the convenience, not with any malified intention. Sorry. So this is one thing where they have brought in that what type of books to be maintained, in what form, what manner, and at which place. Again, a very welcome change, because now there could be a, it will be a very symmetric way of keeping a thing in a proper way. Everybody will have the same thing. Penalty for passing on unreasonable benefits to the trustee or specified person. Again, if some trustee is taking unnecessary benefit from the trust, again, that could be really a cause of concern, wherein they will be laying down the penalties, and that penalties would be charged from the person, not from the trust. Trust does not have to pay. It is a person who has taken this benefit has to pay this penalty. Accumulation provisions are now applicable to both the exemption, as I said, 11.2 is applicable, and explanation 1 to 11.1 is applicable. It is clarified that if a trust or institution was able to apply 85% of its income during the previous year, then the trust institutions are allowed to accumulate such income for a period not exceeding 5 years in both the exemption. Further, as per section 11.3c, now this is also very, in 11.2, what was the olden time, as if you see, was very good, that, whatever 11.2 accumulation we used to do, it is in the 6th year, which was applicable. Because this 11.3 subsection 11 subsection 3 clause C gave us that 1 year more time to spend the money. Now that has been waived. It has been they have deleted that part of it. Now we need to spend this for within 5 years only. It was a 6th year initially. Now it is only 5 years. Let's take an example. If a return which is filed in 13-14 financial year, and if there is an accumulation in the 11.2, so it was very clear. We used to get 13-14 is from 14-15, 15-16, 16-17, 17-18, 18-19, and 19-20. So before 31st March 20, because we used to get that 1 year more. Now the law says that within 5 years. So now if the same is applicable today, instead of 19-20, it will become 18-19, because within 5 years now. That is very clearly mentioned now. It is not in the 6th year it would be allowed. It should be within 5 years. So within 5 years, you need to spend that accumulated income for the purpose for which it was accumulated. Otherwise, in the 6th year, it would be taxable, because you are not spent in the 5th year. There, what would be a situation in the 7th year, it was taxable. That 1 year flexibility was given to you. So there, the changes are brought in right now, so need not worry about it. Even the provision applicable to section 11 subsection 3A for the change of purpose for which the income was accrued 11.2 will now be applicable to approval. One more change which has come now in 11.3. Initially, whenever you file 11.2, let us say you have written a purpose that you want to construct an education institution, a building for the education institution. Due to some or the other reason, you could not fulfill that. And in between the accumulated period, you can go to the income tax department and make an application under section 11 subsection 3A for the change of the purpose, and it has been granted. The same will now be applicable to 1023C because there also these approvals have come, accumulated income has come where there would be certain form which would be specified. So even there the purpose would be allowed to change. Now let's take a situation. A charitable institution has accumulated this income for the construction of a charitable for a building for the education purpose. After 3 years, they came to know about it that it is not possible because we are not able to accumulate so much fund where we can construct a building. So they shifted the object. Now they say that they will buy few commercial property in the ready-made building. Let us say that 10,000 square feet they will buy. In the 4th year, they came to know that is also not possible. So you can again go. It's not written in the act that only once you get a change of purpose. You can go again and again if your case is very genuine. And if you are able to explain to the officer your difficulty, your genuinity, he is duty bound to give you the permission. Because if he is convinced and he accepts whatever is there. So you can go many a times till a time where you need to spend for the purpose which was last applied for. So here even for 1023C that is applicable. Henceforth, any application of any accrued income, credit or paid to any trust will not be allowed. This means what? 11.2 accumulation cannot be credited or paid to any other charitable institution. It has to be spent for the purpose for which it is accumulated. That money cannot be given as a donation to any trust, any institution, as it would not be treated as if it is a expenditure for which the income was accumulated. So mind you, this is also a clause where a lot of stress has to be given because initially what was happening that the trust which was accumulating was giving that away to another trust by way of a donation to be spent by that trust. Because they did not have that capability or they did not have that feasibility to do it on their own, but that has not been allowed now. So again here we need to be very clear about it that it is for whatever it is accumulated, it has to be spent only and not given to any other trust. The provision of section 13 are now applicable to approval under 1023. 13 means any payment to any relatives or any known people. There the 13 comes into a big way. So even now initially section 13 was not applicable to 1023C. Now after the amendment which has been brought up in 2022, this is now been applicable. Any application directly or indirectly for the benefit of any person referred to 13.3. Such income or part of income property shall deem to be the income is now applicable. Now same 13.3 as 13 is applicable, 13.3 also will be applicable. The provision of section 115 TD, TE and TF are now applicable to trust. That is charitable institution under 1023C. You can just see by comparison what was 1023C. This 1023C also was diluted somewhere in the year 2005-2006 because I remember in my olden days when I used to practice, once that 1023 institution comes, even there was no requirement of any audit. There was no requirement of filing the income tax return also. Any approval, any institution which were approved under 1023C has lot of benefits. Even books of accounts was not compulsory to be kept. Thereafter, it has gone on change, and now it has been par with your 12AB, the new 12AB which has come. Voluntary contribution for renovation and repair of temples, mosques, Gurudwara. This is one very again a welcome change that any renovation to any of the religious places it would be treated as if it is a corpus donation only. So again, that is again one thing which has been brought for it's a welcome change for the religious organization. People have a wrong thing that is not a welcome change, because people have a doubt that again if they were treating this all thing as normal thing. But now any voluntary donation which you give, and if that voluntary donation, let's say a box donation wherein it is written on the top of it that is for the renovation or repairs of that institution, whatever money comes, that would be directly treated as a corpus donation now. So that money will be used for that purpose only. Application will be allowed only when it is actually paid. This is a very, very big change. Very, very big change. Very, very difficult change. What does this mean? Paid means actually you need to utilize. Actually you need to, there should be a payment. There cannot be a journal entry. There cannot be any provision. Now here the problem is going to start, which I don't know whether they have understood or not. Section 8 company is governed by the Companies Act of 2013. And if you see there, the law is very clear. The books of accounts in Section 8 company has to be kept on an accrual basis. Now again, it's very funny thing. Income tax is also a central law. Companies Act is also a central law. One law says that the accrual system only has to be followed, and one they say that only paid system will be followed. So here again would be that you have to prepare the accounts on the accrual basis, and you have to prepare the computation of total income on the paid basis. So like two things have to be maintained now. Otherwise, this will not work otherwise. So again, this is a change which has a far-reaching ramification, and care has to be taken out here. Care has to be taken out. Proportionate income instead of entire income now made taxable on account of prescribed non-compliances. First time, if the laws are broken or if anything is found which is not there, only the proportionate income where they have come to found out, that is, let's say that there is some income which is not in tune with your activity or whatever the things are there. So they can just bifurcate that and they can claim that, and that would be only taxable. Your whole trust would not be taxable. A illustration is given. I think it's this is illustration which has come for the new amendment which has come. The new amendment which has come is if you know that a corpus donation after 1/4/22, whatever corpus donation which you receive has to be matched with investment under section 11(5) of the Income Tax Act. There will be a matching concept. Whatever old corpus is there, not to worry about it. So let's take an example that you have received this corpus donation after 1st April 22, 10 lakhs rupees. So this 10 lakhs rupees has to be matched with that 10 lakhs rupees. Let's say FD has been taken. So you need to earmark that. Okay, this 10 lakhs rupees for which I have taken this fixed deposit, or I have invested in so and so bonds, or wherever applicable investments are there, which is really allowed by the department as well as the Charity Commission. So here the matching concepts have started, that now they will understand this corpus can be matched. So this is one change which has come. The another very important change is about the loan received and loan repaid. It's a big change which has come, because we were claiming twice the deduction which was there, which they have now brought out par. Like let's take an example that I have received a loan, and against the loan I have bought certain movable items, capital items. So what I used to do is that I used to even take whatever is there, whatever I have bought as an expenditure from the computation of total income, which now will not be there. And whatever loan was also there, that was also treated as at the time of repayment of loan, I used to take as it is an application of money. So it cannot happen both the ways. It has to be either one way, where whenever you repay the loan, at that time you take an expenditure, and whenever you receive the loan, at that time you can treat it as an income. Now the government has come up that whatever you buy from that loan would not be treated as an application. So I have given this illustration to you, wherein if you can see the facts of the case is that I have received normal donation of 10 crores. Interest FDR plus saving is 2 crore 50 lakhs. Corpus donation of 10 crores. Specific donation dialysis machine of 5 crores. And loan from banks 1 crore. There is an administrative expenses of 1 crore. Expenses on the object 1.75. Immovable property purchase 7 crore. Purchase of dialysis machine 1 crore. CT scan 75 lakhs rupees, expenses towards object 10 lakhs, and donation, that is accumulation 11 is 50 lakhs. Now let's take the olden times. This is an old thing. Now this computation will be before the amendment. Normal donation 10 crores, interest 2.5 crore, administrative expenses on the object of the trust, property purchase, dialysis machine purchase, CT scan machine purchase, loan, provision for expenses towards object of the trust, and it is 90 lakhs is your surplus. There is no accumulation needed because your expenditure is 92.8%. You are below, you are above the thing. So there was no in the olden before the amendment came. Now after the amendment, normal donation is 10 lakh 50,000, interest is 2 crore 50,000, donation to another trust. It's not allowed because that 50 lakhs would be treated as an income. As I said that from the accumulated fund, you cannot give a donation. So your income becomes 13 crore. Administrative expenses 1 crore allowed. Expenses on the object is allowed. Property purchase is normal, not from any other thing. So that is allowed. CT scan is from the loan, so not allowed. Dialysis machine is not allowed. Provision for expenses towards object of the trust because provisions are not allowed. Surplus is 75%, like 75% expenses only been done. So here the 11(2) would be applicable. Why the law has changed? Because there are certain expenses which is now will not be allowed because it is a double type of expenses which the government is taking. Like from a corpus donation also, why this has been done is that once you treat this as a corpus donation, you get an exemption. But whatever you buy from the corpus donation, you cannot claim it again as an expenses now. Because you cannot get twice. Once corpus donation exempt under 11(1)(d), and once you buy certain asset out of it, and that also you claimed as an expenses is not been allowed now. So that part government has come up, and it is a welcome change because it is a double exemption, which has been was done at the time when the computation was prepared. This is a AIS information which has just come. So this is, I thought about it, which will be applicable to all of us, where all the information of the TDS, specified financial transaction, payment of taxes, demands and refund, pending proceedings, means everything will be there now. Our full record will be there, where they will be having day by day, this would be increasing a lot because they try to tie up with even the share market, wherein the profit and loss account can be directly worked out by them. There could be tie up with the banks already has been done where they can get the information. Tie up with all the registration department, wherever the property registration departments are there, where they come to know now that immediately when I buy a property, immediately that thing goes to the income tax department that, oh, this property has been purchased by Mr. Shah, and whether that property will be shown when I file the return, they will correlate that. If not shown, immediately the notice would be coming. So many good things because of the computerization, because of this digitalization or whatever you say has been done by them also. They are updating themselves very well because nowadays the officers who are there as far as charitable institutions are concerned, I'm talking from the income tax point of view, are really very good. They have a lot of knowledge. They have been getting a lot of training, and they have people who have understood this law much better and very nice. So it's not that, we can just take them for a ride or something, or we cannot tell them that this is what, and they just readily accept it. This is Form BD, which has just been launched. It has been launched on 26 April 2022, and you have to comply before 31st May 22. This is a funny part of our system, like, and here also, if this form has come, many chartered accountants who are into practice, they are having a tension about it, that, we did not have any time. So again, we are going to represent. I don't know, one thing again and again, we go, definitely we are also representing a public at large, we have that, we should also be a part of that system. But also, okay, this also is something really, it's very, you're notifying on 26th April and you're expecting on 31st March 22. Because just imagine the size of trust like Tirupati or a size of trust like Sri Ravi Shankar or any of these spiritual gurus who are there, and any of these big temples, big charitable organizations. How can they? Because lakhs and lakhs of donations are coming to it. How are they into it? And as such, this 10 BD has a problem because there are certain things which is going to be a problem. How you are going to report what is in kind, what are the situation where there are a lot of things which are going to come into it. And I think at a later date, I'm going to discuss about it because there are a lot of, columns to it. There are a lot of details which are required to be filled up. No doubt, the Excel, whatever you're going to prepare will be, you can just transfer it to this form and that could work out. But at least you have to prepare that Excel and do all the thing about it. And let's see how it works out, because for smaller trusts we have tried, we were successful. We are trying now for the bigger trust, like, our clients are working on it. Let's see how it works out. I'm sharing a slide, and already we are going to do, we are going to work on it. If there's any question, unique identification number of donor will be there. If PAN and Aadhaar number means you have to have a identity of the donor who is given, either PAN or Aadhaar, where the code is 1 and 2, and they have gone so deep that if PAN and Aadhaar is not there, then taxpayer's identification number of country where the person resides, passport number, elector's photo identity number, driving license, ration card. Means they want the identity. At least, ration card everybody will be having, driving license would be having, electoral would be having. Means they want the identity of a person who is giving, because the idea is very clear that based on this, they are going to, if the PAN and Aadhaar is given, it is directly going to be reflected in their returns. That is what is an idea. But this is what has been told to us, that this is what they are going to, this is why this has been brought into. I don't know what it is. But again, giving all this information, we are in public domain now. Like they know everything from where our money is going to come. Likewise, in other laws, when I'm going to discuss that also. Donation type, whether corpus, specific grants, others also still, we are not able to understand whether others means in what does that mean. Mode of receipt, cash, kind, electronic mode, including pay and others. Again, others mean barter system or anything, I don't know, that clarification has to come. Separate row for donation given by the same donor in following situation, eligible under different section, different type, different mode. So like one donor can be into, we need to fill up the information 2 or 3 times, because if he is having the different criteria. Controversial issues, why donation is in kind details required when the same is not eligible for deduction, because they said that why this form 10BD was brought in, just to see to it that from the form BD only it goes directly to the people who are going to take exemption, because there also they were having difficulty, because there is no verification process whether I have whatever I have stated 1 lakh, 5 lakh donation, whether it is okay or not, because all the cases cannot be taken out for the scrutiny. In the scrutiny, they can ask for it that what is the ETG certificate that you have, what is the donation that you please give us a donation receipt. But in maximum time, they were just processing, the CPC was processing it without any details. So many of these people were taking undue advantage of it and taking exemption, even not giving donation to a charitable institution. So it was an intention. If this is an intention, then why they want it in kind, when in kind you don't get that ATG? Let's clarification come from then. What does others signify? What are the consequences if donation details are not filled up or not properly filled up? Again, here also that could be a problem, because you need to give us all the information, otherwise there could be a problem. Whether donation receipt to be issued as per form 10BE, still it has not been notified. Whether separate donation receipt need to be maintained by the trust, that's up to the trust whether they want to maintain or not to maintain. But once form 10B notifies, that is compulsory, they have to maintain that in that whatever format they have given to us, they will be giving to us. Whether any threshold limit for reporting, no. Even 1 rupee, 2 rupee, 8 annas, 4 annas, 5 paisa, everything needs to be reported. That's really funny because a lot of this representations have come to us from this Kabutar Khana people and all, where they have these people who come and they give 1 rupee, 11 rupee, 21 rupees. Now, how they are going to give a track of all that money? So again, that's a problem wherein how to give it, because there is no limit prescribed. What is the consequences of donations as reported in Form 10B and as filed in do not match? Again, a blunder, whatever we are going to show as a donation and whatever we are going to show in BD, because we may not be having all the information. So our total in BD may not tally with our ITR. So what would be the consequence? Let sometimes go, let us do the assessment and let's see how it works out, then only it will know. Generally, nothing should happen according to me, because always it is donation that what we are going to show in the ITR will be always more than what would be in 10 BD. It will never be other way around. Whether FCI donation has to be reported as they do not claim ATG benefit, gray area, no one knows about it. Okay, whether only ATG can be reported. Yeah. Aman, let me complete this FCR also, then only I take question answer, na dear? Or you want to have a part of it? And
So, sir, at the end, we will take all the question answer.
very good, Vishal. Thank you. FCRA. Even I am thinking how to start, because this is the most draconian law that I have seen. And nowadays it has become so popular, like, where we are really facing a lot of problems. The renewals are not coming. The accounts are getting seized. The accounts are getting cancelled. No representation is there. Personally, we are not allowed to go there. It is online. And really lot of problems have been there. And government itself is supporting that, they don't want it, because whatever amendments which were carried out in 2022, institutions have gone to the Supreme Court, and Supreme Court has justified that whatever amendments carried out by the ministry are genuine amendments, and they approved, they put their rubber stamp on that no problem at all. Whatever amendments are really a welcome change. So let's go ahead and look into it, that what are the amendment. Again, my question would be that whether we need to continue having FCRA, or we want FCRA, or a charitable institution are coming for us for an advice. What advice we should give them? Go for FCRA or not to go for the FCRA? A lot of things are in our mind, because the way the things are happening, the way the things have been looked into, no doubt, certain laws amendments are required, certain tightening of laws are required. I appreciate that. But in this, what is happening, that certain genuine organizations are suffering. And still the non-genuine organizations are still flourishing. They are there in the market. They are there registered. No one touches them. And they are there doing the activity, what is to be done. So here again, let's revisit this and let's see what are the further changes that they have brought in. Even this law is like every year getting amended. I will not go into all this definition and everything, which I think you people will be aware of it. Foreign source, this is the thing which is there. This is one slide which I would like to deal with it, that I would like to clarify here one thing. We are doing this FCRA audit. We are doing a FCRA audit, and then we certify, we give this certificate as a chartered accountant, that whatever is there, everything is okay. But I have found certain mistakes or whatever, not mistakes, I would say, that unknowingly, I would say, not with any malafide intention. But people have done audit without going into a basic thing, is whether the donation that has come, whether they are from a foreign source. Because many a time people have that notion in their mind that any money which is coming from out of India is a foreign source. Here I would like to pause, and only one thing I would like to tell you is that if you are doing an audit of any FCRA, charitable institution, please ask for the person who has sent this money whether the passports that they are holding are Indian passport or a foreign passport. I have no doubt the color of money does not play anything out here. Whether the person has given you in pounds, whether that person has given you in dollars or in franc or whatever the thing, or dirhams, I care a damn about it. My only concern out here is that you have to see what passport. If it is a foreign passport, even that person, if he is giving in Indian rupees, mind you, it's a foreign source. So this much check I would like you to do henceforth and go ahead. And then only you certify and give your certificate. Otherwise, you are going to have a problem, because from 1st April 22, the Home Ministry has started auditing of the FCRA registered trust. They have issued notices to certain charitable institutions wherein their audit team is going to start from 15th May to do an official physical auditing. They come to your office and do a physical audit. Now, intention behind this is only two things. Is whether the money that has come to India is whether that is a legal money or not, genuine money or not. And whatever money which has come, whether that has been spent for the purpose for which the FCRA registration was granted. If you see the FCRA registration, they have written the purpose out there. In certain FCRA registration, if you see, they have written it is educational only. In certain, they have written it is social. In certain, it has written economic. Now, let us be very, very clear that that certificate, if it is only for the education and that person has spent for the medical, what would be a situation? There is a clear-cut violation. No doubt your constitution states that you can have an education object, you can have a medical object, you can have a relief of poverty, you can have all other objects which are there, what is possible. But your FCRA state that you can only do educational. Again, that could be a problem because they have given you permission only to use it for the education purpose. So please verify when you do this. The audits have started. I have still not attended that audit. My first hearing is there on Monday, where people have come from Delhi and they are going to come to my client's place. That would be my first audit with them. I have been issued a questionnaire which is running into almost 6 or 7 pages, where I need to fill up what I have seen, based on it what I have verified, and I have to meet them once when they are there. They are going to be 10 days in Bombay, and they are going to scrutinize my FCRA, my client's FCRA book. I don't know what would be the thing. Maybe and initially I got a notice that they want to do it from 15-16. Thereafter, there was a rectification. They said now they are going to do for 18-19, 19-20, and 2020, only last 3 years. Because they also don't have manpower. That's the worst part. Like they don't have manpower. So let me see, let me have a feel what exactly it is. I'll also get, what I've been preaching a lot, what I blunder that I have done. It's a learning, and what could be the consequences, I don't know. Because today, everything happens, it is we chart account and what to be blamed. So I'm waiting for it. So whatever you people are doing, please look into it. Many a times the charitable institution insists that passport koi deta nahi hai. Jo donation deta hai, they don't give the passport here. It's a very confidential data. Certify that, right, in your audit report. right? State that so and so person has not provided the password, they have treated this. I'm not able to comment on it. Whether it is an foreign source, it is an FCRA thing, or it is not non-FCRA. Write it down. Protect yourself. Definitely you lose that audit. I also know, because they will go to someone else. But we have a lot of people who are interested in doing audit and they will not see all this thing. But let's see now, we have to do certain things. Otherwise, we are into midst of lot of controversy and it's going to be a very bad for us there. These are the forms. There are certain forms which have been changed. The last form, that is FC7 form. Application for surrender of certificate of registration. This has come now. Because many of these FCRA, now the government does not want you to give new registration. Any new registration is going to be like a very big task, very, very big task. They have that 180 days in their law that within 180 days from the day when we apply, they have to give the certificate. But it's just on the record, because they have written after that still, if they are not convinced of whatever it is, they can take more time. They have kept that window open for them. And it's difficult to get FCRA nowadays, very, very difficult. So now what has happened, that they have also come to know a lot of charitable institutions who are now not getting the FCRA, or who are not very comfortable in getting FCRA, how to come out of it. So this FC7 for application for surrender of certificate of registration, you need to do, you have to submit the relevant documents along with that. There will be an inquiry, you have to comply everything, and thereafter you can close. You cannot say that, I have not filed the FC4 form for last 3 years. Or I have not opened up the State Bank of India account in the Delhi branch. That main branch, this is one branch which is they have now done it. No, you have to do everything and thereafter you can go for FC7. It is not just you can close. You comply everything and then come. Pay all the penalties which are there and then come. Intimation for the change in the original key member. Again, many people have not done it. They have filed the change report in the Charity Commissioner, but they have not filed it in the FCRA. Not done, do it now. Because for everything there is a penalty. You have to pay the penalty, get it regularized, and you are out of it. Rest everything is okay, because some changes have been done. That ABC form, application for FCR registration, 3B is for application for FCR prior permission, and 3 is for the renewal of FCR registration. Each application has to be done, supported by the documents, compliant with everything, and then only it has been to be filed. Recent amendments, opening up of a designated FCR account in SBI. This was one of the tasks, I think, where if people have achieved this, we in our language say कि उसको मोक्ष मिलता है. अगर ये SBI में आपने खाता खोल दिया तो, the person gets, so satisfied. Like how you visit Charity Commissioner office. It's just like that, here also, like, it was a big task which was given. Many of the trusts have lost, like, they have not opened the SBI account. No, it is all right. Because of these consequences which are there. Reducing the threshold limit of allowable administration to 20% of foreign contributions. 50%, it was 50, which is drastically brought down to 20% straight away. Means your administrative expenses should not be more than 20%. 100 rupees, 20% is allowed, 80 you have to spend for the object for the project for it is being done. Affidavits mandatory need to be submitted by all directors, office by trustee in case of renewal. Now, once you read this affidavit, most of the people have not got for renewal also. So many conditions are there. And it's a draconian thing. Like, when I gone through this affidavit, and there are good trustees who are there, when they have a legal team who had scrutinized their affidavit, this affidavit, they have been advised by their legal team, please sir, you don't sign because you're cutting your hand, because you get everything. If anything happens, they are held responsible. This affidavit is like that, sir. But you need to do your affidavit, otherwise your renewal will not happen. In case of prior permission, if the amount to be received is exceeding 1 crore, welcome change, the central government will permit to receive the same in installment. Let's take an example. I have made a prior permission. One Mr. X who is living in USA wants to donate 5 crores. But in the olden times, that 5 crore has to come at one time. Now I cannot, get such a huge donor. I can talk to that donor that, in installment basis, if you give it to me, my requirement is 5 crore. Even that 5 crore which is going to come to me, I'm not going to use it at one go, but it will take time. So as and when I require, I'll call for it. So here the installment facility, some 2 or 3 installments are given to you, and then on that basis you can call for it. But when this installment is given, then the law is made very well. Let's take, I get a 5 crore, I call for 2 crore installment, the first installment of 2 crore. Now my next installment I want of 1 crore will be only allowed once my 2 crore is exhausted. Then only I can make an application, and then the permission will be given for that 1 crore to come in India. So it's good that once you exhaust, then you go. Once you exhaust, then you go. No transfer of foreign contribution to any other institution, even if they are registered with FCRA department. It's not allowed only. Not from one FCRA to another FCRA also. From FCRA to non-FCRA, it's not possible only, but people are doing it. And there is a consequences. There is a penalty and everything which has been there. And again, this also has to be thoroughly verified by us when any transfer has happened from an FCRA to non-FCRA. The basic problem with the institution is that there is one person who is an accountant, who does accounting for your FCRA accounting also, and who does accounting for your normal accounting also. Now there is a salary structure for it that 40% we will put it in FCRA and 60% we will put it in normal account. So what is the smartness is that he transferred that 40% from his salary, from his FCRA account to the non-FCRA account, and from there he takes checks. Whether that is allowed, they say no, it is not allowed. So you need to give 2 checks. Now again, there is a problem to it because there are a lot of consequences of the PF, ESI and everything. So here again, sometimes the thinking process is not being matched with the other consequences, other chain reaction which is happening. Additional compliance that any person seeking prior permission, registration or renewal of registration must provide Aadhaar card of all his office bearers, directors or key functionaries as an identification document or a copy of passport or OCI for identification in case of a foreigner. This has become compulsory now. Aadhaar has become compulsory. New provision allowing that on request being made, the central government permit to a person to surrender their registration certificate. Like what I said, on a request, like file a FC7 form, everything is complied, your registration can be surrendered. As per section 11(2), if a person is found guilty of violating any of this act, it may direct that such person shall not utilize the unutilized foreign contribution or receive the remaining portion of foreign contribution which has been received, as a case may be, without the prior approval of central government. Means nothing. If you are found guilty, your account is freezed, or you cannot call for any of the funds from outside, because now every account has to be in State Bank of India, and every account, if you see the credit, the money which is received and the money which is transferred to your account, there is a time lag. Sometimes 10 days, sometimes 15 days. The person who has given donation will try to say, I have received, I have given a donation. What is happening? But it's not been credited to my account because there is a check being done of that person who has given the donation. If there is any suspicious, they do all this activity, because that is why they want this under one roof, so that they can have a control of what money is coming from out of India and from where it is coming, which country, which state, which place, who are the people. So this all has been, they are doing it. Definitely, again, if it is done for the benefit, it is 100% right, need to be done. Identity check is a must. Otherwise, there could be a problem, because many a trust had created a problem for our nation. They are misusing the funds which are coming. So that definitely it is required. The words of George Bernard Shaw. This is where I always, like this. I am of the opinion that my life belongs to the whole community, and as long as I live, it is my privilege to do for it whatever I am good at. I want to be thoroughly used up, and when I die, for the harder I work and harder I share, the more I live. I rejoice in life for its own sake. Life is no brief candle for me. It is a sort of splendid torch which I have got hold of for the moment, and I want to make it burn as brightly as possible before handing it on to the future generation. With this, thank you. Question answer session. Anybody? Yeah, please. Someone
you.
can take it. I'm sorry. I have. It is 6. Oh, I'm within time. Huh? I'm sorry. Yeah.
Thank you, sir. Thank you. Request
Vishal
Aman
sir
to
should, yes, I'll take the
please take the questions.
Uh, okay, so there's a question whether all trusts need to file donation receipt details before 15th May or only trusts registered under 80G need to comply.
Only 80G. Sorry. Yeah. Only 80G trust who has the 80G benefit.
Okay, another question from the same person, whether basic exemption of rupees 2,50,000 will be available to charitable trust. If yes, whether the same is in addition to 15% of the receipt allowed under section 11.
That basic assumption of 2,50,000 will be allowed definitely. And about that 15% is that a permanent thing, like, that is over and above everything. You have to have only the exemption part of it. That is 2,50,000 only will be allowed. Not even 2,50,000 and 15%. Both will not be there. Let's say your 15% can be more than 2,50,000. So your 2,50,000 will be allowed.
Okay. And whether corpus donation given to charitable trust will be qualified for 80G deduction.
Yeah, of course, 100%. 100%.
If change reports are pending, now this is in relation to charity commissioner. If change reports are pending for the last 15 years, including trust changes, address change, etc., what is the solution? Any penalty charges? Understand that certified trust deed copy to be obtained from charity commissioner office. Is it correct?
See, as far as your 15 years or 20 years or 25 years or 40 years or 50 years, if you have a record, you can go ahead and file the change report. Because, for the record, like minutes should be there, notice should be there, and sufficient evidence should be there with you, your addition, deletion of the trustees or managing committee or whatever, executive committee that you are maintaining. If you have all the records, you can go for it. Yes, certified copy need to be obtained from the charity commissioner office, and that has to be attached along with the application. Even schedule 1 copy has to be attached, but nowadays there is a problem out there because they are rewriting the schedule 1 register, so it's not been available. But everything said and done, every year there would be a penalty, because every year you need to file an affidavit for condonation of the change report which you have not filed within 90 days. There will be an application as well as there will be an affidavit which both need to be filed. And there would be a penalty which would be levied, which would be decided by the assistant charity commissioner in whose jurisdiction your trust falls. There is no set formula. There is no set formula. Some people charge 100 rupees, some people charge 500 rupees, some people charge 1,000 rupees. There is this fantastic lady who is a well-known person out there. He always calls the trustees, and thereafter, if he likes the trustees, he gives them a free thing. If he does not like the face of the trustee, it can be 5,000 rupees also, but everything is challengeable. The normal thing would be that it could be between a range of 100 rupees to 1,000 rupees or maximum 2,000 rupees per change report.
Now, trust to be registered by virtue of will. The estate has equity shares of listed company which the nominee has dematerialized in his name. Now, what is advisable, to sell shares before registering trust by nominee or to sell equity shares after registering trust in the name of trust?
The will is very important. If the will is stating that, that this equity share will go to a charitable trust, then how can you sell? You cannot be, because that is a will of a person who has created this trust, who has made this trust. So it's a testator's will that we cannot go against that. So once, if the will is very clear that you need to transfer this to a charitable institution after creating a trust, do it. You have a 1-year window. You can sell it, not a problem, because that it is allowed, because that has come to a will. So there is no problem about it. That will allowed under 11(5) also, as well as under section 35 of the
35.
Maharashtra. Yeah.
Okay. Can you please provide us a checklist of annual compliances which a charitable trust has to do and auditor has to verify and report? Such non-compliances noticed while auditing of a charitable trust.
Compliance chart procedure. I'll be providing it to you, Aman. Please
Okay.
share it with them, please. Yeah.
Sure.
Hmm.
In religious trust, where trust has applied accumulation for renovation of temples, in this case, amount given to other trust for renovation purpose, whether this amount to donation to other trust, I guess, is it allowed under accumulation 11.2?
Now it will not be allowed. Henceforth, it will not be allowed because it's very changed. You cannot give it to any other trust because why the trust is doing a renovation? Because a trust is not supposed to do any renovation work. No? Because see, a person, it's not that you are transferring this to a trust and then that trust is doing a renovation. That's a different thing. Thus, what I understand one thing is that whether an accumulated funds can be transferred to another trust, it's no.
Okay. Now, 11.2 accumulation up to 31st March 2022 will get 6 years time or 5 years time?
5 years now. That till 31st March 22, it will be the 6th year. From 1/4/22, it will be 5 years.
Okay. Form 10BD is required in case of nil receipts of donation. I don't think so.
No, absolutely no.
Regarding accumulation under section 11.2, is it advisable to have a 1-to-1 exact match between accumulation as per form 10 for 1 year and investment in approved investment under section 11.5, or is it okay that total accumulation required as per form 10 for 2 years is rupees 50 lakhs and trust has aggregate FD of say rupees 60 lakhs?
No, there has to be exact matching. Whatever the accumulation is then, or whatever corpus donation that you have received, or your specific grant that you have received, it's advisable to have an exact thing because it will not be otherwise. How you did that 60? Because I have got only 50. How can it become 60? Don't just mix up the thing because otherwise that 60 will get blocked. Let that 10 what is there, you keep it floating now because that can be used anywhere thereafter.
Donee will get deduction only when ATG trust files donation return in form 10BD.
Right now, that is the situation because then what is the things? But I think this initial period it will not be applicable, but at a later date definitely. Once that 10BD is not there, the donor will not get the exemption then. But I think this year or one more year they may think about it. Otherwise, what you said is right. Yes. If the details are not filled up properly in 10BD, the donor will not get any exemption in his return of income.
Sir, but in 10BD, in the ID proof section, they've given 5-6 options, even driving license. So if someone has given just a driving license, how will it auto-populate in the donor?
That's the thing, that's the worrisome that, the law says very clearly that, if the BD does not have a thing, then you will not get it because they wanted only the Aadhaar and PAN can be linked with the return. Otherwise, it is not possible only. And technically, let me be very frank with you. If suppose I want a ATG exemption, definitely I'll be having Aadhaar and PAN. Normally, like when you justify yourself, like when we just see from a normal thing, it's not possible that I will be giving a driving license, or I will be giving my passport copy, or I'll be giving my ration card. These are the ration card and all is for the small people who don't have identity. Just government wants some identity. That someone who is giving donation, the trust should have kept some identity.
And which ITR form should be filed by a trust having no 12A registration?
ITR 5.
Some trusts raised funds for COVID vaccination, floods, etc., but full amount is not spent. Can unspent amount be used for other charitable purposes?
I mean, they have taken it for the specific purpose, giving a specific certificate, then they cannot spend it. Otherwise, if suppose the intention is that only take a donation, internally they must have decided that they had taken for the COVID. A resolution need to be passed again that yes, we are not able to use now because there is no COVID in India. or cannot be used, can they be used for other purpose? They can do it, no problem at all.
Okay, and whether charitable trust can invest in mutual funds, and whether required to be intimated to charity office.
See, it's a very big question here because many of the consultants, I would not say chartered accountants here, many of the consultants and many of the CFOs of all these mutual funds or a person who are working with these mutual funds, day in and day out, they come to us, and many of these big trusts, they come to us that, now fixed deposit rates have come down, and it's a drastically come down. So I think the income has really drastically reduced, and genuinely they are not able to, do a charitable activity, or there's a genuine loss because of that, because the income is not so much and the expenses is already been there. So they have come and asked us whether we can invest in mutual fund, because there are a lot of mutual funds who are very safe and they give some type of benefit also, where the rate of interest is low. My only concern out here is that, one very, very valid thing is that after 2001, please make a note of it. After 2001, Charity Commissioner has not given a single permission. And that's a worst situation, because if the Charity Commissioner is not given a permission, how come a trust, because a charitable trust, now as far as charitable trust or society which are registered under Maharashtra Public Trust Act, this is a law that we need to be followed, that whether Charity Commissioner permission is given or not. It is a Section 8 company. Section 8 company, people are rampantly utilizing this into even equity link mutual funds also. It's not that it's not there, but again, income tax has its own thing, 11.5. There is a language which is, they say that, in the unit trust of India, in units you can invest or something like that. My only concern out here is that, if they have a permission from the income tax department, please go ahead with it, take it. Or if they have a permission from the Charity Commissioner department, please go ahead. Only they write at the back of the prospectus that, charitable trust can invest, or we have already taken permission, and once you go and ask for the permission, they don't give us any permission. The permission which is taken in 1998 for some other purpose, they show to us that this permission is there. It should not be, because trustees are the custodian of that property. And I've been very blunt, like, nowadays what now again, I would like to, educate all the people who are right now that please take a specific permission from the Charity Commissioner under Section 35 of the Maharashtra Public Trust Act. Go and take it. And thereafter, 90% of the application will not go through it. Why? Because there is an affidavit which is to be given by the trustees that in case if there is a loss, in case, it is a trustee who is going to fulfill from his personal pocket. And once when we tell the trustee to give this undertaking, my application is lying in the Charity Commissioner and nothing is happening. Because Charity Commissioner insists that kal loss hoga to kya hoga. They are worried about that. So mind you, if the trustees are willing to take that risk, and if we are getting a specific permission from the Charity Commissioner office, go ahead, please go ahead, not to worry about it. Now come to income tax, because that is a state law. Income tax, what it is? Nothing. Income tax has its own worry itself, because 11.5 has no clarity about it. Because the language used is, sometimes it is so language that even equity based can be given, because it is not mentioned that it is not been given. But wherever as an auditor we are there, please write it down that this investment which is been made, there is no permission from the income tax department, there is no permission from the Maharashtra Public Trust Act, and to that extent our report is qualified. Please make a note of it. Otherwise, again, it will come to us that we have certified that, we have given them the permission, and based on that, again, we can land ourselves into problem. According to me, no, you cannot invest in mutual fund unless and until the permissions are there. Many of these people, many of these bigger trusts have invested, they are investing. I have no problem about it, because I have no say to it. Like, I cannot tell them not to do it if they want to do it. But if you ask professionally to us, no.
Can you please guide on how the change report for FD or reinvestment for the full year is filed, and is a request for condonation also required to be submitted?
See, technically, I would say as on 31st March, whatever is there your investment, compare 31st March of the previous year, if there's any change, put it up and file a change report. It will suffice. There is no condonation required because that is as on 31st March we are writing it. Within 19 days, that is before 30th June, if you file, there is no condonation required. 99.99% as Aman, you are practicing, I am practicing out there. They come up with this, every 3 months or 6 months that scheme, they take out all the report at one go. What is that called? I am just forgetting that. They come up with a thing where officers are doing only that work. Like every day, they have a target of completing almost 500 change reports. So in this 500 change report, this all change reports gets done. It in the special drive, they say there's a special drive. So in that special drive, this all change report gets accepted. Not to worry about it, please.
Okay. And there are a few questions in the chat box also. I'll
Yeah,
read them.
please.
Whether charitable trusts can invest in perpetual bonds issued by banks.
After you obtain a permission from the charity commissioner, you can. Perpetual bonds are now a very big thing because a lot of banks have come up with these perpetual bonds and the rate of interest are very good, 8.5, 7.25. We have also done for certain thing and we have got some permissions from charity commissioner. So you can go ahead with it.
And in continuation to the same question, another person has asked, is it a deposit permitted under section 11.5? The perpetual bonds.
See, technically, I would always say that it is a allowable investment because charity commissioner is giving a permission as far as the things are concerned, and that's been it's an unsecured. I appreciate what you are saying. It's an unsecured because it's not been backed by any government or anything, because this is not backed by anything. They write in that prospectus itself that this is an unsecured perpetual bonds. It's not a secured perpetual bond. It can be income tax if suppose someone wants to venture into it, can be a problem. Can be a problem, 100%. Because income tax does not have any cognizance of whatever permission you take from the charity commissioner. They don't believe in it. So that can be a problem.
Okay. And if the donee does not give details about ID proof, is it taxable in the hands of the trust as anonymous donation?
Yes, 115 you see that,
100%. Whether trust undertaking CSR activity on behalf of any corporates need to refund the unspent amount back to the corporates in the context of amendment on CSR law in Companies Act?
Technically, in the olden times, if the agreements were such that you have to refund back, it was to be refunded back. But now, whatever the balance amount which has been lying unutilized amount, it has to be refunded back to the corporate. Not to worry about, because there will be the company, the CSR law itself provides for it. So you have to refund back.
Okay. So a lot of times I've practically seen that the trust which has received the CSR funds, the unspent amount, they invested on behalf of the companies. So is it the correct approach?
Should not do it. Should not do it. Not a correct approach.
Okay. And
because we are not their investors. It's not an investment arms for them. No. Yeah, please.
Okay. And there's a question, is there any rule for maximum number of trustees?
Law is silent. People are not able to manage in 2 trustees. I don't know why number of trustees there. 2 trustees, people are not able to run. But it's not, the law is silent. Law is silent.
There is loss in current year and income due to violation of section 11.2, whether such can be set off against each other.
No, not possible. Not possible. It will be taxable.
Okay. Whether independent auditors report management representation letter require along with audit report under Maharashtra Public Trust Act.
See, Maharashtra Public Trust Act is okay. That's not a thing. But they don't provide for it. But always, I would say that, if you want to have a fair practice, please take it. It's advisable to take it. It is always advisable because that MRL management representation letter will be really helpful to you. If there is any problem with any of the department, because you have really followed all the whatever the audit norms to be followed. So I always say that you should take it, sir.
Okay. I guess no, there's one more last question. I guess it's already covered. Any threshold limit for donation amount in Form 10BD?
No, there is nothing now, because I
Okay.
said right, before I end my presentation, I would like to thank Abhay Mehta for giving me this opportunity and recommending my name to your study circle. And it's always a pleasure, really, to give whatever I have. I think I would have done more justice. As always, see, when I end my lecture, I see that a lot of things is there in me. There are a lot of practical experience that I have in my life while doing a lot of these cases, and which I don't know, time permits sometimes. Next time we will discuss about. Thank you very much, and
Thank you,
thank
sir.
you to all the convener, deputy convener, office bearers of Borivali Central CPS Study Council. Really, thank you very much.
Thank you, sir, sparing your valuable time. And members will agree that sir has proved his authority on the subject. Thank you, sir, for accepting our invitation and enriching the knowledge of our member. I request Sikandar to give hearty vote of thanks.
Oh, Sikandar is giving me a vote of thanks.
Yes,
Oh,
sir.
I'm really proud. Really proud.
We are also proud to have him as our committee members.
Exactly. Yes, Sikandar. Yes.
Thank you, Vishal Bhai. It is a great pleasure and honor to propose vote of thanks to CA Dr. Gautam Shah sir. Sir has started his presentation with practical issue on a lighter note. He has discussed and explained various issues: re-registration, Section 12AB, new scheme for re-registration, reapproval under Section 1023C, etc., with table and chart. He has also explained filing of Form 10A, discussed various controversial issues. He has covered important amendments as per Finance Act 2022. He has also discussed AIS, Form 10BD, etc., and FCRA. I think today's session was a marathon session on trust, covering maximum aspects. As there is a saying, we rise by lifting others. Thank you, sir, for sharing your knowledge and views on this subject and lifting all of us. Now I request present members for a virtual applause. Thank you, sir.
Dil mange more. I'll come again. Don't worry.
Thank you. We'll call
Thank
you.
you.
Thank
Thank
you.
you. Thank you, sir. Thank you.
Thank you, sir.
Yeah.